The era of classical algorithmic trading is over. Not obsolete, extinct. The quantum reaper has arrived, and its blade cuts through the very foundations of high-frequency strategy. Classical models, built on sequential processing and probabilistic approximations, now operate in a realm of diminishing returns. They cannot handle the exponential complexity of modern markets, where volatility cascades and micro-inefficiencies emerge at nanosecond scale. Quantum algorithms change everything. They don't just accelerate computation, they redefine it. While classical systems simulate one path at a time, quantum parallelism executes millions of market scenarios simultaneously. This isn't incremental speed, it's a paradigm shift. Arbitrage opportunities once invisible to human perception, hidden in the noise of cross-asset correlations, become detectable, executable, and profitably exploited within the blink of a photon. The death of classical models is already here. Monte Carlo simulations, mean variance optimization, even advanced ML frameworks, these are now relics. They cannot process the data density, the interdependencies, the sheer scale of quantum-driven market dynamics. Traders clinging to legacy systems are not just slow, they are blind. The adaptation is non-negotiable. You must rebuild your risk framework from the ground up. Integrate quantum-resistant cryptography into your infrastructure. Partner with quantum-native platforms for real-time portfolio optimization. And understand this, efficiency is no longer about speed alone. It's about the ability to model and act on the full spectrum of market uncertainty, a capability only quantum algorithms can deliver. The new frontier isn't just faster, it's fundamentally different. And the market is already moving. Classical high-frequency trading has pushed computational limits to their absolute edge. We've optimized latency down to nanoseconds, yet the fundamental constraints remain: binary logic, linear models, and the exhaustion of compute cycles in predicting complex market microstructure. The market's true dynamics, interconnected global flows, sentiment shifts, and systemic risk defy classical if-then frameworks. Enter quantum computing. Superposition allows qubits to exist in multiple states simultaneously, transforming a single calculation into a multidimensional analysis. Entanglement links qubits instantaneously, enabling correlation across vast datasets without physical transmission. This isn't about speed alone, it's about a paradigm shift. Where classical models see discrete outcomes, quantum analysis reveals probabilistic landscapes. It processes thousands of market scenarios at once, weighting them by likelihood, not just possibility. The future of trading isn't merely faster execution. It's a fundamental reimagining of how we interpret market complexity. We stand at the precipice of a new era, where uncertainty itself becomes the data. In the relentless pursuit of alpha, classical algorithms hit fundamental limits. Qanexra's quantum annealing redefines risk management by solving complex portfolio optimization problems intractable to conventional methods. It navigates non-convex constraints and systemic risk interdependencies in real time, dynamically reconfiguring portfolios to absorb shocks before they materialize. Simultaneously, quantum arbitrage exploits fleeting market inefficiencies with microsecond precision. While classical systems operate in milliseconds, our quantum processors identify and execute cross-market arbitrage opportunities before the market corrects, turning latency into a structural advantage. And beyond speed and risk, quantum machine learning unlocks hidden market patterns buried in noise. By processing terabytes of alternative data at quantum scale, our models detect subtle correlations and regime shifts with unprecedented accuracy, patterns invisible to classical analytics. This isn't incremental improvement. It's a paradigm shift where strategy, speed, and insight converge to redefine the boundaries of financial engineering. The quantum age isn't coming. It's optimizing the market now. The race for quantum advantage in trading isn't merely technological. It's a strategic battle for market dominance. Banks like JP Morgan and Goldman Sachs are pouring billions into quantum R&D, seeking edge in portfolio optimization and risk modeling. Yet tech giants, Google, IBM, Microsoft, deploy vast computational resources and attract the world's top quantum physicists. This isn't just about faster algorithms. It's about who controls the infrastructure of tomorrow's finance. The true battleground, however, is talent. The global pool of quantum computing experts is vanishingly small. Firms are waging a war for scarce minds, offering salaries that dwarf traditional finance roles. This talent war isn't just competitive, it's existential. Without skilled architects, even the most advanced hardware remains inert. But the stakes extend beyond profit. Should quantum advantage concentrate in a handful of institutions, market stability faces unprecedented risk. Algorithms capable of processing vast, real-time data could amplify volatility or create unforeseen systemic feedback loops. The ethical question is no longer theoretical. If only a few entities wield this power, who sets the rules for market fairness? The quantum age demands not just innovation, but a global framework for responsible deployment. The winner won't just be the fastest, it must be the most prudent. The quantum trading frontier demands we confront its most immediate reality: hardware. Current quantum processors remain fragile, plagued by high error rates and limited qubit coherence. Decoherence disrupts calculations before they're complete, rendering today's quantum advantage largely theoretical for complex market modeling. This isn't a distant challenge. It's the bedrock we must navigate now. Concurrently, the absence of a clear regulatory framework creates significant operational and reputational risk. Market integrity, data sovereignty, and the potential for novel quantum-enabled market manipulation require proactive, harmonized global standards. Regulators must evolve beyond classical paradigms to address the unique dynamics of quantum-powered trading systems. The imperative for the industry, therefore, is twofold. First, traders must cultivate quantum literacy, not as a niche skill, but as core competence. Understanding quantum principles, error mitigation strategies, and the limitations of current hardware is non-negotiable. Second, deep integration with data science is essential. Quantum algorithms will augment, not replace, sophisticated statistical modeling. The traders who master this fusion, bridging quantum theory with market dynamics, will define the next era of strategic advantage. This is the true quantum edge. Not the machine, but the mind that wields it. The future of trading isn't just quantum, it's quantum literate. The trading floor of tomorrow bears little resemblance to today's. It is not a cacophony of shouts, but a symphony of human insight amplified by quantum-powered algorithms. Here, the trader's edge is not in speed alone, but in discernment. Augmented decision-making is no longer theoretical, it is the new baseline. Algorithms process terabytes of data in milliseconds, identifying patterns invisible to the human eye, yet the final call rests with the trader who understands the context, the nuance, the why. This is not automation, it is elevation. The market's complexity is accelerating. To thrive, continuous learning is no longer optional. It is the very oxygen of the profession. The quantum toolkit evolves faster than any curriculum. Traders must master not just the tools, but the underlying principles: quantum probability, error correction, the interplay with classical systems. This demands relentless curiosity, a commitment to learning that spans academic partnerships, industry consortia, and hands-on experimentation. The shift is already here. Those who prepare today, by engaging with quantum resources, understanding their strategic implications, and cultivating that uniquely human capacity for judgment, will define the next era of markets. The quantum-ready mindset isn't about replacing intuition. It's about making it exponentially more powerful. Start exploring. The future trades on preparedness.